the stocks are up, people are like, man, I wish the market would fall so I could buy stocks. But now that it has fallen, where are the buyers?
It's a market downturn that has investors doing one of two things, either frozen in fear or in a frenzy shopping for sales.
I wait for these times to buy stocks.
Thomas is clearly one of the sales shoppers out there, and he's going to explain why, how it's worked for him in the past,
This downturn is going to make millionaires.
and even share a couple of the favorite stocks he's buying right now during this dip. Let's dive in. Thomas, it's been quite a 2025. A lot of investors are a little bit nervous right now, and even a lot of fear out there, it seems.
Yeah, there's a pretty good amount of fear, even though we were expecting some turmoil from Trump's inauguration and his policy changes. The reality of them has raised some fears of recession, some fears of inflation, contrary to each other. And that's brought a lot of uncertainty into the market. And so instead of buying or really even selling too much, a lot of people are just sitting on the sidelines.
Yeah, I think a lot of people don't even want to look at what's going on in the market right now because the news has just been so bad and people are losing real money. Let's just even take a look at kind of where the overall market is right now.
Well, right, the S&P 500 has corrected 10% to its low of just last week. It's rebounded a little bit since then, but 10% is a pretty decent chunk of money for people to be losing. What I would say is not to focus so much on the balance of your stocks because that'll bounce back with time. But look at the discount that's available to the market. I mean, when the stocks are up, people are like, man, I wish the market would fall so I could buy stocks. But now that it has fallen, where are the buyers, right? So market's fallen, it's time to start buying some stocks.
Yeah, we're going to get into how you handle times like this for sure. But I think that you are right. I think right now we're just seeing so many people kind of frozen, so many investors who are just like, let's wait and see what's going to
Right.
happen with this market right now. How do you handle this personally, Thomas, with your own investments? What do you do when we see a big dip like this?
Well, two things to this. That's a big question. Two answers, two parts of that answer. One is that generally speaking, I wait for these times to buy stocks. I'm watching the market every day, but not every day is a good time to buy. I want to buy when there's a big dip. I like to save my investable cash, build up my cash position until the market is down, and use those times to buy stocks. The fundamental situation is still very positive. There's uncertainty in the market right now, but there's no real fundamental sign of bad things happening. There's risks of bad things happening, but right now the labor market still looks strong. Inflation has cooled down a little bit. Other economic indicators remain mixed, but we've seen mixed data for the last couple of years. So really the fundamental picture remains solid. So in that view, we're still in an uptrend. So any downturn in prices would be a technical buying opportunity.
While the fundamental key indicators might not show or that there's a huge problem right now, I think the uncertainty comes from all of the sudden changes happening from the White House, happening in politics right now. I think that uncertainty has a lot of investors uncertain about what to do with their finances. Can you talk about those who are concerned about kind of that unexpected, unpredictable factor out there right now?
Well, right. Well, for them, I'm going to tell you the same thing that your investment advisor will probably say, and that's just to stay the course. You have a plan, just stay with it. Do your best to ignore the market dips because they're going to happen. And then when the market starts to move higher, not to get too excited and throw good money after bad. I mean, it's just a matter of staying the course, being patient, being consistent with your investment choices.
Let's take a look at historically. What have you seen in the past, Thomas, as long as you've been investing, of what has happened with your own investments when you've bought during a downturn similar to this?
Oh, the rebounds are leveraged. If you've been building a position before the downturn and you get a discount, you buy some more stock at a lower price. When it rebounds, your return will be leveraged. So when the stock price returns back to where it was before, your balance will be bigger than it was before. And when the stock price advances to new highs, your gains will be accelerated versus what you would have made in the past. So those dips are really important for compounding your positions.
Do you have any specific examples of times that's worked for you?
Well, Kraft is a great one. Right now, Kraft is down, and I wish I had more money to buy some. This stock is trading at like 10x its earnings. It's yielding over 5%. Every time it moves back up to the top end of its range, I'm able to trim some and take some profits. Right now, my Kraft position is basically free. It's paid for itself over time.
That's one good example, Thomas. Another stock I want to talk about specifically with this downturn is NVIDIA. I know this is one of your favorites as a long term investor. What do you say to investors out there looking at NVIDIA right now with where the price action is at this week?
Well, right now we're just past the GTC conference, and I would say the market is consolidating. It's range bound. The big news out of the GTC was that no new catalysts emerged. There was no new surge in demand, no new like super growth market that was opened, but it did affirm the long-term outlook for sustained double-digit growth. The company is going to grow another 150% in the next decade. Its price multiple relative to the 2035 outlook is under 10x. So it really is a deep value, but it may take some time for the market to regain its traction because right now what we have are a lot of speculators from the AI bubble getting out while we have long-term investors who are trying to get in, and that's creating some volatility and it may keep the price moving sideways for a little while.
Yeah, that volatility is, I think, what is scaring so many investors right now. With many investors going, well, I want to buy the sale, but is this a sale or is it going to drop even more in the near future? What do you say about finding that bottom in a time like this?
Well, calling a bottom is pretty tough. I mean, as they call it trying to catch a falling knife. You're going to get cut. So the best thing to do is just to sit back and wait for the bottom to form. Now, in that scenario, a lot of investors will miss out on the first 5 or 10% of the rebound. But who cares if you miss that if you've alleviated the risk of losing money and you can still catch that 80% to the next peak. So it's just a matter of waiting and being patient.
Patience is always a virtue for investors, but it can be hard in a market like this. If you're looking for some more stocks to help reduce the risk in your portfolio, check out our latest free report on marketbeat.com called Reduce the Risk: How to Help Your Portfolio Manage Through Any of These Ups and Downs. You can scan the QR code or click the link in the description to get that free premium report on marketbeat.com right now. You're not the only investor out there or analyst out there who's saying right now is the time to buy because the payoff is huge. Talk about what some of the other big analysts and big names out there are saying about this downturn right now.
Well, right. One of the most prolific market commentators, Tom Lee, says that this downturn is going to make millionaires. And I totally agree with that. His comment aligns with my own outlook, which is that the fundamental situation is still positive. The outlook for stocks is still bullish, but we have some near-term headwinds and uncertainty causing a buying opportunity. The fundamentals remain bullish. The uptrend is intact. So in this scenario, any market downturn should be viewed as a buying opportunity. And that's what he's talking about. The market will probably rebound very strongly. It'll probably set new highs by the end of the year, and investors who buy the dip and leverage their position will come out ahead.
Yeah, the Tom Lee make millionaires phrase has been talked about a lot. It's what investors want to hear about right now in kind of this scary situation. This week, we also heard from billionaire investor Ron Barron, kind of similar sentiment about everything is so cheap right now.
Well, right. If you look at a lot of these stocks, Nvidia in particular, these market leading stocks, they had been trading at very high multiples. Nvidia was trading at like 35 or 45 times earnings. Now it's down to 22 times earnings. It's like 50% discount in a valuation compared to where it was. That aligns it with Walmart. Nvidia and Walmart are not equal. Walmart does not deserve an AI premium. Nvidia does deserve an AI premium. Walmart is growing, but not at a double-digit compound annual growth rate. NVIDIA is growing at a double-digit CAGR. So, in that respect, NVIDIA and many other of the leading tech stocks and many other leading blue chip growth companies are also trading at values, and it would be a good time to buy them.
All right, so we've covered what some of the big analysts are saying about this downturn, but what about the institutions? What are they doing right now?
Right, the institutional activity is pretty telling. You have to remember that institutions own the bulk of stocks, especially the S&P 500, and their activity in the first quarter of this year has been very bullish. They were selling many of our leading stocks, including NVIDIA, in Q2 and Q3 of last year. They reverted to buying in Q4 of last year, and they ramped their activity to multi-year highs in Q1. In most cases, including NVIDIA, Microsoft, Amazon, a lot of these stocks, we have to assume that they're going to continue to buy softness as the quarter progresses and going into Q2. They're going to provide a bottom for the market that eventually is the starting point for the next rebound.
Yeah, their buying right now would certainly indicate that they expect to see a turnaround coming soon. I want to hear your take on when you think this turnaround could last and how long the market could stay in more of this negative downturn season.
Well, it really comes down to the uncertainty. A lot of analysts are looking for the uncertainty to diminish by the second half, whether that is because tariff threats are reduced or because we just become accustomed to them. Either way, by the second half, we should see volatility start to subside, people starting to focus back on the long-term outlook, which is for sustained economic and earnings growth, and that should get the S&P 500 rally back into gear.
I want to end this conversation with a little bit of the other approach and other thoughts out there about stability might never come with a president who doesn't really have a solid, stable personality. That we might continue to see a lot of these unexpected decisions that overall will impact the market again over the next few years.
Yeah, that's always going to be a risk. Politics are always a risk. Trump, especially, is going to be a risky president. But I don't think that we're going to see too much more escalation of risks that he is able to bring to the table than what we currently have. I think that right now, with inflation, with government workforce reductions, with geopolitics, with Russia and the Middle East, there's not much more damage that he personally can do to the global situation.
Let's hope that outlook is correct. We'll just see what the future brings. Thank you for the analysis, Thomas, and thank you for joining us. Let us know what you think about this downturn. Are you buying right now, or are you in the wait and see moment to see when that rebound might actually start? Thanks again for watching, everyone, and as always, happy investing.